Experts in the crypto world have been discussing the potential for Shiba Inu to reach the $1 mark, and many enthusiasts have been wondering how fast this could happen. While some believe it's a long shot, others argue that it's not as far-fetched as it seems, especially considering the factors that often go unnoticed. Most analysts focus on the market trends, investor sentiment, and general crypto market behavior, but some of the more nuanced drivers might hold the key to understanding Shiba Inu's potential future growth. These are the aspects that aren't always talked about but could very well play a pivotal role in the price surge everyone is anticipating. Let's explore those possibilities and see if there's a more realistic timeline for Shiba Inu's journey to $1. After the Bitcoin ETF received approval, there was widespread excitement. The general expectation was that the entire crypto market would surge as a result of this event. Investors were optimistic that Bitcoin's rise would naturally create a ripple effect across other altcoins, including Shiba Inu. However, the reality turned out to be quite different. Rather than witnessing an immediate explosion in the market, we encountered a significant roadblock. What happened? The market was taken by surprise when Grayscale, which holds a large portion of Bitcoin, decided to offload some of its assets following the ETF approval. This unexpected sell-off generated an overwhelming amount of selling pressure that shook the entire crypto market. In this situation, even with BlackRock, Fidelity, and other major institutions stepping in to buy, the sell-off from Grayscale was so massive that it caused a downturn instead of the predicted upward movement. Billions of dollars were being funneled into Bitcoin, but Grayscale's decision to sell countered that influx, leading to an overall crash in the market. For many, this was a confusing moment, as it contradicted the typical expectation that ETF approvals would fuel bullish behavior. This goes to show how unpredictable the market can be, and how even major players like Grayscale can dramatically influence market conditions. Now, after weeks of this crypto roller coaster, the situation seems to be stabilizing. The initial panic and massive sell-off appear to be subsiding, and the good news is that BlackRock and Fidelity's Bitcoin ETFs are now surpassing Grayscale in trading volume. This is a positive sign for the market, indicating that the institutional interest in crypto is still strong and growing. What does this mean for Shiba Inu and the broader crypto market? It means we may be in for a slow but steady recovery, one that could benefit altcoins like Shiba Inu in the long run. Shiba Inu enthusiasts are especially excited about the potential removal of 1.0 from its current price, a symbolic but significant leap in value that could happen sooner than we think. This small step is already a big deal for the Shiba Inu community, as it shows momentum and the possibility for even greater price increases in the future. But that's just the beginning. The long-term projections for Shiba Inu suggest even more substantial gains, and it's this potential that we're going to explore in greater depth. To understand Shiba Inu's possible trajectory, we need to look at the bigger picture of crypto market dynamics, particularly how major financial institutions are interacting with the space. Take, for example, the idea of BlackRock and Fidelity making a 1% allocation of their portfolios to Bitcoin. At first glance, this might not sound like a lot, but in the world of finance, especially at the level of these institutions, a 1% allocation represents a massive amount of capital. It's a calculated move that acknowledges the growing legitimacy of Bitcoin as a store of value and a hedge against inflation. When companies as large as BlackRock and Fidelity allocate even a small percentage of their portfolios to Bitcoin, it signals a broader acceptance of crypto as a viable investment option. Now, consider the scale of this investment. A 1% allocation towards Bitcoin from these financial giants could inject a staggering $230 billion into the market. The ripple effect of such a large inflow of capital would be immense. Using the Bank of America bull market multiple, analysts have projected that this could push Bitcoin's market cap to $27.1 trillion. That's trillion with a T. In this scenario, the price of a single Bitcoin could reach an astounding $1.29 million. This isn't just speculation, it's a logical extension of how institutional money moves markets. If BlackRock and Fidelity follow through with their 1% allocation to Bitcoin, it could cause a massive surge in Bitcoin's value, and history has shown that when Bitcoin rises, so do many other cryptocurrencies, including Shiba Inu. Shiba Inu, with its current market cap of $5.3 billion, represents just 0.3% of the total crypto market. If we apply the same market growth assumptions to Shiba Inu that we're applying to Bitcoin, then a similar influx of capital could push Shiba Inu's market cap to $81 billion, which represents a 650% increase from its current value. This 650% growth projection is impressive in itself, but here's where things get even more interesting. This forecast assumes that Shiba Inu does nothing new, no new projects, no major developments, just a natural rise in value following Bitcoin's growth. But we know that's not the case. Shiba Inu's development team is working tirelessly to introduce new projects and initiatives that could drive even more growth. One of the most ambitious goals of the Shiba Inu project is to bring 1 billion users into its ecosystem. This isn't just wishful thinking, it's a clear vision supported by the project's roadmap and the continued innovation happening behind the scenes. Shiba Inu has already proven that it's more than just a meme coin. With the launch of SHIBARIUM, a Layer 2 scaling solution, Shiba Inu has shown its commitment to becoming a serious player in the crypto space. SHIBARIUM is designed to improve the scalability and efficiency of the Shiba Inu ecosystem, which in turn will make it more attractive to developers and users alike. One of the most exciting aspects of SHIBARIUM is its potential to burn Shiba Inu tokens. 70% of the gas fees generated by transactions on SHIBARIUM will be used to burn tokens, which means that the supply of Shiba Inu tokens will decrease over time, making each remaining token more valuable. This burning mechanism is a crucial part of the long-term value proposition for Shiba Inu. As more tokens are burned, the supply becomes scarcer, which in theory should drive up the price. What makes this even more exciting is the recent announcement from a Shiba Inu developer that they plan to onboard 1,000 new projects onto SHIBARIUM. This influx of new projects will bring a surge of transactions to the network, which will in turn accelerate the burning process. If SHIBARIUM is able to burn trillions of tokens, the price increase could be even more dramatic than the already impressive 650% growth forecast. But let's take a moment to consider the long-term implications of these developments. While short-term gains are always exciting, the real potential for Shiba Inu lies in its ability to grow over the next several years. The token-burning mechanism, combined with the continuous development of new projects and the growing user base, creates a strong foundation for long-term value appreciation. If the Shiba Inu project can continue to innovate and attract new users, there's no telling how high the price could go. Of course, it's important to remember that all of this is speculative to some degree. No one can predict the future with absolute certainty, and the crypto market is notoriously volatile. That said, the projections we've discussed are based on real-world financial models and market trends, which gives them a solid foundation. The potential for Shiba Inu to reach $1 may seem far-fetched right now, but when you look at the bigger picture and consider all the factors at play, it's not as unrealistic as it might seem at first glance. The real question is whether you're willing to wait for the long-term payoff. In the crypto world, patience is often rewarded. Many investors get caught up in the short-term fluctuations of the market, making decisions based on fear or greed. But those who take a long-term approach and understand the underlying value of projects like Shiba Inu are often the ones who see the greatest returns. This isn't about trying to time the market or make a quick profit, it's about understanding the potential of a project and being willing to hold on for the long haul. While everything we've discussed today is part of a larger, long-term strategy, it's important to remember that the crypto space is constantly evolving. New players are entering the market all the time, and the landscape could change dramatically over the next few years. Institutions like BlackRock and Fidelity are just the beginning. We haven't even factored in the potential for retail investors, corporations, or governments to start making significant moves into the crypto space. If other major financial institutions follow in the footsteps of BlackRock and Fidelity, the amount of money flowing into Bitcoin and the broader crypto market could be astronomical. In conclusion, the future of Shiba Inu is full of possibilities. Whether we're looking at a 650% increase based on current trends or something even more dramatic due to token burns and new projects, the potential for growth is undeniable. Shiba Inu is not just a meme coin anymore, it's a project with real value and a dedicated team working to ensure its success. The question now is, are you ready to be a part of that journey? Only time will tell if Shiba Inu will reach $1, but one thing is for sure, this is a project worth keeping an eye on.